The number one question most clients have when considering a mortgage in divorce is, do I qualify? Without knowing for certain whether a new mortgage is feasible, how else can you plan to accomplish the goals you set out to accomplish as part of your divorce settlement? In this video, I want to give you a glimpse into the 3 magic numbers that lenders are going to be scrutinizing in your divorce mortgage application. You might have heard of these magic numbers referred to as the 3 C's: credit, collateral, and capacity. Let's go ahead and take a closer look at each of them. Credit score, also known as your FICO score. But what is a FICO score? A FICO score usually ranges from 300 to 850. The score takes into consideration a number of different factors, such as your history of paying bills and whether you borrow a lot of money, such as credit cards. There are 3 credit bureaus that collectively help to determine your FICO score: Experian, Equifax, and TransUnion. Those bureaus issue your credit scores. Now, it's important to understand, the middle of these 3 scores is going to be your FICO score. In other words, not the highest score, not the lowest score, but the score that falls right in the middle. A high score equals a lower interest rate, and a low credit score equals a higher interest rate. Many of the top lenders expect a FICO score up to no less than 620, depending on the size of your loan and the type of transaction. If you miss the mark, it's going to cost you. Collateral, also known as your LTV or your loan-to-value ratio. First of all, if you haven't caught on by now, banks love acronyms. Don't let these cute acronyms fool you. They're way more important than you might think. An LTV, or a loan-to-value, is used to determine how much equity you have in your home. The math is simple. Take your current balance, or balances, and divide it by the appraised value of your home. That's your LTV. The lower the LTV, the better. Why is a lower ratio better? Well, think about it. The lower the LTV, the more equity you have in your house. Lenders consider this equity as protection for the loan they're issuing you. This is especially important in a divorce scenario in which a spouse may be required to buy out the other spouse's interest in the family home. Tapping into equity for buyout purposes is a direct increase to your LTV. The equity must be there in order to accomplish a divorce buyout. As with the FICO scores, the higher the LTV, the higher the rate, and vice versa. Risk remains the common denominator here. The bank is in a riskier position by lending you an amount of money that is higher in proportion to your property value. And here's a quick tip. You can always opt to pay down the mortgage balance with your own money to get the LTV in line with some of these lender requirements. The third, and in my opinion, the most critical number to your application is your debt-to-income ratio. And the acronym, because you knew there'd be one, is DTI. DTI is your capacity, which is also the 3rd C that you were waiting for, to repay your mortgage. The income the lender uses will be factored in against your monthly obligations. In other words, monthly debts divided by monthly income. Voila! You essentially have your finances boiled down to just one magic number. The debts or obligations that I'm referring to include your housing expenses, such as your mortgage, property tax, homeowners insurance, as well as anything else that might appear on a credit report, like credit cards, auto loans, leases, student debt, etc. Another huge factor in your DTI is both spousal and child support, whether it's to be paid and or received. More on that in another video. In general, anything over 50% in most cases will knock you out of the box completely. As with the LTV, the DTI cannot be offset by your large bank account balance or other compensating factors. At the end of the day, you might have a lot of cash, your family might know someone, the bank you go to might enjoy your company, and they might even give you a cookie from time to time. But if you don't meet all 3 of these magic numbers, you'll quickly find yourself looking for a plan B. For divorce tips, head straight to our website, survivedivorce.com.